Every single US crypto investor should be preparing for what I'm about to tell you in this video. This is not to scare you, it's not to get you all fired up for no reason. This is something that could be on the table in the coming months after a Bitcoin ETF approval. It's something that we must prepare for in order to take advantage of what new laws and regulations could look like once a Bitcoin ETF is approved. Now, full disclosure, I don't know exactly what's going to happen, but I covered this topic back in June, and I feel as if it did not get the amount of traction that I thought it would or should get. So my hope is with this video that it finds you well. Please help us out by hitting the like button down below, because this is not a price prediction video. While those are fun, this is not just a general news topic, which are also very important. This is something, again, that could be the future of crypto in the United States and what it could look like for each and every one of us. As you guys know, I am a crypto investor in the United States right now. So this topic is certainly important to me. And again, as I mentioned, I covered this in June, but I wanted to resurface with the Bitcoin ETF on the table, projected to be approved here in the coming days. So make sure you guys pay attention to this entire video, because it is everything you need to know in order to get ready and be prepared. And this topic was covered back in June by CoinDesk. Now, there's a lot to get to here, but it has to do with policy changes across the board. And when I say policy changes, we're talking about stable coins, DeFi, as some of the next targets for the United States to tackle once a Bitcoin ETF is approved. Keep in mind that a Bitcoin ETF is not a stable coin, nor is it in DeFi necessarily. We talked about stablecoins many times here on this channel, and how many governments feel threatened by stablecoins, right? Because they are essentially pegged to the dollar, which obviously are a threat to a digital dollar or CBDC, or even just the regular dollar, right? Which oftentimes is digital, by the way. And DeFi is interesting because while it's very convenient for the consumer and the investor, it is not necessarily a perfect match with what governments want. They're going to want centralized finance and crypto trading being done through centralized authorities. And that's what we're going to talk about and break this down, because USD coin is Coinbase's stablecoin. We know that, right? It could be next to be targeted by regulators. And when I say regulated, it doesn't necessarily mean all bad. It could just be changing a little bit in terms of what the USD coin is. Now, we know it's backed by a company in Circle. USDT, a little different in that there's always been some question marks around USDT. The fact that they can essentially print more of it, albeit you can print more of the US dollar too, and they do. But that's neither here nor there. That's not for this video. But we can take a look at some of the things in this article and really learn and be prepared for what's coming. Now, stablecoins and DeFi, it says, are likely to become the next targets in the United States and Exchange Commission's crackdown on the crypto industry. This is, again, from back in June. Now, it's been on the table for a while. We haven't heard a lot about it lately. That's because all eyes right now are on the Bitcoin ETF. Once that is done, the attention is going to come back and shift over to everything else that's not Bitcoin. They want to get this thing done, and then, okay, what about everything else? And there's a reason why XRP got caught in a long legal battle for 3+ years. I think it was deliberately. I think it was done probably in a smart way on some aspect in their case, because they didn't know what to do with XRP or everything else that wasn't Bitcoin. Now, did it need to be dragged on for 3+ years? Probably not. But a lot of that is out of our control. What we can control as retail investors in the United States is being prepared for what we need to do and where we see this thing going. It says the investment bank said the SEC may now focus on bringing stablecoins, including the two largest by market cap, that's USDT and USDC, and DeFi protocols, into regulatory compliance. Now, what I think could happen here is going to be a big push toward centralized platforms. We saw that Coinbase recently broke news that they were having their own spot trading platform. If I were the United States and I were thinking like they would think, okay, now again, these aren't my thoughts. I'm putting myself in their shoes here. They're going to want all of this trading to go through centralized routes rather than on Uniswap, PancakeSwap, what have you, right? The SEC said earlier this month it was suing crypto exchange Binance. Again, this was back in June, okay? And operating company and CZ and the operating company for Binance.us on allegations of violating federal securities laws. A day later, it sued rival exchange Coinbase on similar charges. And then all of a sudden, we heard more news in the back half of 2023 that further made this point even more valid, right? They went after Binance even harder. Now, the SEC is looking to reduce the potential for unregulated DeFi protocols. There's no doubt to serve as viable alternatives to regulated lenders and exchanges. Then they could, quote, target the stablecoins that serve as the lifeblood of DeFi. This is written by analyst Mark Palmer. I agree 100%. And exactly how this is going to look, we don't know. But again, this video is to put it on the map. It's to put it on your radar because I think a lot of the attention is going to shift here once this Bitcoin ETF is approved. Okay? By targeting these stablecoins, it's no surprise or no secret that the SEC could weaken the DeFi ecosystem by doing so. Okay. This analyst further said if USDC is targeted by US regulators, the impact on Coinbase's revenue could be significant, noting that in the first quarter of 2023, the exchange generated nearly $200 million in net revenue, about 27% of total from interest income earned on USDC reserves. I think the United States is going to look at this very thoroughly before they make a decision on what to do with everything that's not Bitcoin. Bitcoin, which the SEC has affirmed as a commodity rather than an unregistered security, is likely to be the ultimate beneficiary of this crackdown. Take notes. And this is why Bitcoin is my largest holder. Do I invest in altcoins? Yes. Do I think there's value in altcoins? Yes. Do I think some altcoins will survive this barrage if it comes? Yes. But it also means that Bitcoin remains my top holding for this reason and this reason only. Not only the CFTC, who handles commodities, but the SEC even looks at Bitcoin as a commodity or property. The same cannot be said for anything else. And it's DeFi and it's stable coins where the crackdown could come sooner rather than later once this Bitcoin ETF is fully approved. So I hope this video found you well. We're going to continue to keep tabs on this, of course, as we get more and more information, but I have not forgotten about this, nor will I. And we'll be covering it right here on the channel, so make sure you're subscribed down below. We'll see you in the next one. Take care.